Welcome everyone, my name is Easton Harris, and in this video we're going to be talking about a reversal signal known as the engulfing candle. So here in front of you, this is the bearish engulfing candle. Now on the left is a relatively weak bullish candle, and on the right we have a strong bearish candle, and it just engulfs the entire green candle that printed before it. So with that being said, we can see that the bears are in control and price is being forced down much harder than price was climbing. So there's a lot of strength in the bears. That's what this is telling us. This is the bearish engulfing candle. Now here we have the bullish engulfing candle, which is a reversal signal to the upside. Now we have a red weak candle here, followed by a giant green candle that shows that the bulls are in control. There's a lot of pressure coming from the bottom, pushing price up with a lot of force. These engulfing candles are very strong, very sharp, and very forceful. So with that being said, we're going to hop into the charts and we'll show you some real examples of this. Alright guys, we are in the charts. We got pound Aussie on the 1 hour pulled up, and we're just going to be looking at engulfing candles. So right here, spot an engulfing candle, strong bearish candle comes down, and then a much stronger bullish candle engulfs it. So price gets engulfed by this candle here, and it continues on up. Fairly simple. Over here we have a smaller one. Let me mark this for you right here. This green one right here, you can see that it engulfed the previous two red ones. So that would be an example of an engulfing candle right here, and price continues on up. Let's keep looking. Right here we have another example. This red engulfing candle engulfed this green one next to it right here. And what did price do? Price continued on down. Let's keep looking, see what we got here. Oh, here's an obvious one. So not only did we have the exhaustion, we had the huge engulfing candle through here. That is huge. Engulfed like the last 6 candles. What price do? Continued on up. Let's keep looking. A lot of strength from the buyers right there. Again, we have another engulfing candle through here. This huge green one right here ate everything. Price continued to go up. A lot of force. These engulfing candles show a lot of force in one direction or the other. Now everything's relative to what's next to it. We have another engulfing candle right here. Ate like this whole move. Strong bearish candle. Strong bearish candle. Price continues to the downside. Right here we have a bullish engulfing candle right here. Covered more ground than the last 2 red candle bodies. Engulfed those, went to the upside. Let's keep looking. Let's keep looking. Right here we have a strong bullish engulfing candle. Price continued to the upside after that. We have a strong body right here that engulfs these 2 bodies next to it, but with the wick on it, that's not an engulfing candle. Here we have a giant bullish engulfing candle. Price heads to the upside after that. Look at the strength. This candlestick here engulfs the last 1, 2, 3, 4, 5 candlesticks in one move. A lot of strength here. It's very apparent with these engulfing candles who has control. The buyers. All right, moving on, moving on. Here we had a bullish engulfing candle right here. Price went to the upside as expected. Right here, we have a bearish engulfing candle. Price went to the downside as expected. Now right here in this area, zoom out a little bit. Right here in this area, we had a bearish engulfing candle, and then a couple exhaustions, and then immediately following a bullish engulfing candle, in which the bulls and the bears were both very strong, but the bears did end up taking over. Right here, we have a bullish engulfing candle. Price heads to the upside as expected. Let's keep looking. Right here, we have another bullish engulfing candle. Price rises. Also another one right here. This area engulfs the last two candle bodies. And you can even count this smaller one here, right here, because it engulfs the previous two candles. Now, ideally, your textbook ones are much larger, much more noticeable. Like this one's pretty noticeable. This bearish engulfing candle, price headed down where it led to a bullish engulfing candle where it changed directions. Keep going through the charts here with you guys. Right here, another bullish engulfing candle. Price goes to the upside as expected. Here, this green candle engulfed the red one next to it. Price headed to the upside. Same with this one. These candle formations are everywhere, guys. Bullish engulfing candle. Bullish engulfing candle. Obviously, another bullish engulfing candle. Right here, we got a bearish engulfing candle. Super big red candle. Even another one. Ultimately, price headed to the downside all the way through down here. Right here, this is a bullish engulfing candle, but the resistance held and she fell. Price respected that resistance. Right here, we got another bullish engulfing candle. And ultimately, price does head to the upside. Here we have a bearish engulfing candle. This candle engulfs the last three green ones and then heads to the downside as expected. Very simple stuff, guys. These candlesticks, these engulfing ones, are much more noticeable than the rest of them. And it's all relative to what's around it. Okay, so if out of nowhere you see a huge candle body, you know, odds are that's an engulfing candle. And some are much more obvious than others. But I hope this video gives you an idea what to look for, what exactly it looks like in the charts, and what you can expect to see. Welcome. My name is Easton Harris, and in this video, we're going to be looking at dojis. So all of these candlesticks here on the chart are dojis. Now, most of them, like on the top row, have very small candlestick bodies, if any at all. The one in the top right corner, how the candle body is black, that means that there is no difference between the open and the close price. Okay, so most dojis will look like this on the top row. You'll have wicks from both sides, and what this is just the market showing you that there is indecision in the market. So you don't really know if price is going to go up or down, but a lot of times you'll see these areas at points when the bears or the bulls start to struggle with maintaining control. So that's a lot of times where you'll see that. Now, it's not necessarily a reversal formation. It's just letting you know that, hey, price is going back and forth, fighting it out. The bears and the bulls, there's indecision in the market. Same with the ones on bottom. There's very little movement here, if any at all. So the market has no direction here. There's no force stronger than the other, really. It's just very slow and undecisive. So we're going to hop into the charts and take a look at this. All right, so we're looking at New Zealand dollar here on the 1 hour, and we're just going to go through and I'm going to show you guys some dojis. So here, let's see if I can get in here. We have a doji right here and another doji right here. These are small candlestick, guys. Right here we have another doji, wicks on both sides showing indecision. Up here towards the top, we have a textbook doji. Wick is about the same length on each side, looks good. These are what dojis look like in the market. Okay, over here again, another doji indecision candle. Let's keep looking, keep looking. We got a really small one here, another doji. Doji right here. Right here, we have yet another one, another doji right there. Then towards the bottom here, have yet another doji. Now, oftentimes what these dojis mean are that these buyers and sellers are fighting it out and price can't decide which way it wants to go. And oftentimes you can find these dojis near points of direction changes. Now, they don't mean the price is going to go up or down. It just shows that there is a fight between the bulls and the bears, and momentum is slowing down. That's all it shows. It's no guarantee. Let's keep looking, keep looking. Got a couple of dojis up here at the top. Really small bodied candles, almost non-existent. Let's keep looking. Got another doji right here. This body's a little bit bigger, but it is a doji. That's totally fine. Come through here. Got a doji right here. Got several dojis right here, right in a row. Right through here. And then all across the top there, through here. Super small candles showing a struggle to maintain control of the momentum. Okay, right here, two really great examples in this area here. We've got one right here, and we've got another one right there. Now these two right here, you can classify these as dojis. Candle bodies are a bit bigger, but they are still dojis. They're showing indecision in the market. Keep going here. We've got more dojis. There's dojis everywhere, guys. If you just go back and look, I mean, they are everywhere. Can't turn a corner without seeing a doji. Again, this one's textbook. Right there, that red one. Red one looks really solid. Indecision in the market. Another doji. Down here towards the bottom. Right there. Got another one that followed an exhaustion right here. Exhaustion right here, a couple of exhaustions. Got another doji here. And one right here. That green one. The goal is to get you guys to understand exactly what these candlesticks are and what they mean in the market, okay? I know many of you have probably never traded Forex before or are pretty unfamiliar with it, don't have a whole lot of experience, or maybe someone never just broke this down for you. But here we want to make sure that everyone understands what each candlestick is showing. Okay, all through here we got dojis through there. Got a green doji right here. Super easy stuff, guys. And just remember that these candlesticks mean indecision, a struggle for momentum, a possible trend change, but nothing works 100% of the time. But here, through our platform and our trainings, we will make sure that you guys have the edge that you need to be profitable within the markets. Here's another doji right there. Indecision. Price just happened to change directions here. We've got a doji right here. Doji up at the top. They're everywhere, guys. They're literally everywhere. Doji up here. Boom, right there. Following these huge engulfing candles, doji and fell. But that's what they show. They show a struggle to maintain that momentum because there's indecision there. Another doji down here. I mean, there's just a ton, guys. Ton of dojis all up and through here. Moving on. I'll show you some more. Pretty sure you guys get the idea. We got doji right here. But I want to make sure everyone needs to know what these are. Okay, these candlesticks are very important because if you know how they form and you know what they show about the market, and you have a solid understanding of this stuff, no candlestick will throw you off, and it'll help you make the judgment calls that you need to make. Okay, all through here, guys. I mean, it's just dojis everywhere. And you can't forget that one. Everywhere, guys. Let's see. Find some more. I got dojis here. Dojis over here. And just in case no one has caught on yet about what a doji looks like. Textbook doji right here. Okay, normally they're a little bit smaller, like this one here. But they all mean the same thing. There's just dojis everywhere, guys. I could do this all day. I would never run out of dojis to circle. That's going to conclude this video. Just want to make sure you guys knew what these dojis looked like, so you're not thrown off in the live market when they print. You're not confused, thinking that maybe that's Chinese and the aliens are trying to talk to you from outer space. No, it's just a doji. All right, guys. I'll see y'all in the next video. My name is Easton Harris, and in this video today we're going to be talking about star formations. So for instance, here in front of us right now is an evening star formation. This is a bearish reversal signal, and this is a 3 candlestick formation. It's going to start off with a bullish candle followed by a doji or an exhaustion to the downside, and then a bearish candlestick. Now in this case, the bearish candlestick is smaller than the green one. In some cases, you'll see that the bearish candlestick will be larger than the green one. Okay, they both still count as evening stars and will be treated as the same. And here we have the morning star formation, which is the evening star just flipped, inversed. And this is going to start with a bearish candle to the downside, followed by a doji or an exhaustion, and then followed by a bullish candlestick. And one of the easiest ways to remember these formations is that the morning star, in the morning the sun rises. So this is our bullish formation, okay? In the evening the sun sets, goes down. Okay, so that's kind of how you can remember these two formations. So we're going to hop right into the charts, and I'm going to show you a couple examples of these. All right, we got corn pulled up on the 1 hour, and we're going to look for our morning and evening stars. Okay, so right here, this 3 candlestick formation right here, that is our morning star. So the bears are coming down. We print this exhaustion here. Now this can be an exhaustion or doji. Either way, it's still a morning star. And then we see the bulls take over, and ultimately price rises to the top. Okay, very easy to understand. Price wicks back up. Buyers take over, and price continues up. Super easy, guys. Now over here, let's see, right in this area, we have a evening star right through here. But these 3 candlesticks right here give us the evening star. So we have a push from the bulls, a doji, and then the bears come in, and ultimately price flows to the downside. So that's the idea of these morning and evening stars. They are a little more uncommon to see and harder to catch just because it does take 3 candlesticks to form this formation. So each candlestick has to work to form this formation, whereas with a simple exhaustion, it only takes 1 candlestick. So you're going to see those a lot more than you would these. But this is what they look like in the live market. And you can see how well they're respected. These 2 stars were the turning points of these market moves. All right, so I challenge you to go check your charts, run back through some data, and find some of these evening and morning stars. See how price played out. All right, guys, this has been the evening and morning stars. In Harris, in this video of price action, we're going to be talking about the 3 white soldiers and the 3 black crows. And this in front of us is the 3 white soldier formation. Now, don't worry about the name 3 white soldiers. Back in the day when people first notice these formations, everyone was using black and white candlesticks on their charts. Okay, so people used white candlesticks for their bullish candles and black candlesticks for their bearish candles, which is why this is coined the three white soldiers. Now for this formation, you're going to see 3 consecutive bullish candlesticks, and they don't have to be big. Okay, they're going to be often relatively small to the candlesticks around them. But what this shows is that price is closing higher and higher without even having to put up much of a fight. Okay, so this is the 3 white soldiers, our bullish signal. And now we're going to look at the 3 black crows, our bearish signal. Alright, here's the 3 black crows. Quite the same thing as the 3 white soldiers, just to the downside with bearish candlesticks instead of bullish candlesticks. And this signals the same thing. Price is closing lower and lower consecutively, showing no sign of struggle to the downside. This is our bearish signal. Now let's take some time to go through the charts and point out some of these examples just so you guys know what they look like and how they react within the market. Alright guys, we are going to look at the 3 white soldiers and the 3 black crows. So we're here on corn again, and immediately I can already see we got 3 white soldiers right here. Very simple. 3 relatively smaller bullish candlesticks right in a row. Price flies up. Okay, I can also see that we do have 3 white soldiers again in here, right before price flies up, and then again down here just before price flies up again. And then right over here, these are a little bit bigger, but still 3 black crows, our bearish signal. Price does end up falling. So right here on the screen, we've got 3 examples of the 3 white soldiers and 1 example of 3 black crows. All right, now let's move, see if we can find any more examples. Right here too as well. It's another sign. Right here, to 3 black crows. Okay, moving forward. Right here, again, we have in this area our 3 white soldiers. Our bullish signal, price goes up. Right over here, we have 3 black crows. And price falls. It's like clockwork, guys. Clockwork. Over here, you got your 3 white soldiers. Price rises. Couple more examples here. We got the 3 white soldiers. Price flies up as expected. And then over here we got the 3 black crows. Again, price coming on down. Very easy stuff, guys. There are instances where these formations won't work. Remember, this was a loser here. Nothing works 100% of the time. Don't sweat it. All right, again, through here we have our 3 white soldiers. Price soars up. Over here we've got our nice 3 black crows. Right before price kicks back and soars down. Very easy stuff. Very easy stuff. Let's keep looking. Okay, again, we have our 3 white soldiers in this area. Price soars off to the upside. Likewise over here for our 3 black crows, price flies down as expected. Let's see. Now over here within this area, these last 3, or the ones I got circled right here, 3 white soldiers, ends up failing because overall the sellers are in control with this mean bearish candle. Moving on. Got an example through here. 3 little ones right here. 3 white soldiers. Price continues to the upside. Look right here, 3 white soldiers. Our indicator that price should be going bullish holds at our resistance up here and falls. That'll happen sometimes. So just be prepared for that, guys. Don't use price action solely on its own. Okay, you want to use it as confluence. Use it with other things. That's how it works the best. Okay, so those are just some quick examples of the 3 white soldiers and the 3 black crows. And I will see you in the next video. My name is Easton Harris. In this video today, we're going to be covering the bullish and bearish Marubozu candlestick formation. Now, in front of us is a bullish Marubozu, and the key characteristics to these candlestick formations are that there are no wicks on either side of the candlestick. And you can see when price opened, it went right to the upside, no struggles, very solid, very strong, very confident candle. Okay, there are no wicks on either side. Now let's flip over and look at the bearish Marubozu. Alright, you can see here that on this one as well, there are no wicks. Price is moving very strong and very forceful to the downside. It's not having to fight anything. There's no rejections anywhere. It's just one solid move to the downside. And this is our bearish Marubozu candlestick formation. Alright, so let's dive into the charts real quick, show some examples and what these look like live market. Alright, so I've got UJ pulled up on the 5-minute, and let's just take a look, see what's going on. So we start from the right, work our way left. The first one I'm noticing right here, this bearish Marubozu candle right here. So price prints this. Look how there's hardly any wick on the end. Now it's important to remember there are some minor variations to this. Ideally, you want to see as little wick as possible on both sides to where there's hardly any. Okay, but if there is just a little bit of wick poking out, it's not a big deal. It still counts as the Marubozu formation. But here, guys, you can see that price printed our Marubozu candle and has since been falling. Even printed our 3 black crows here as well. So price is continuing to fall. Over here, let's keep going left. We have an example here of a bullish Marubozu candlestick. And you can see that there's a bit of a wick on the bottom, not a big deal. Overall, this is a very strong, steady moving candlestick. Okay, and then price rose up until we printed our rejections, and then price fell. All right, let's keep looking. Let's keep looking. Couple more examples here. We have a bearish Marubozu candlestick, a lot of force relative to the candlesticks around it. Okay, no wick on the top, very small wick on the bottom. This is your bearish Marubozu, and price continued to the downside. All right, right here we have another one, much larger one here. Okay, strong, steady candle, no wick on the top, moved straight down, and then price fell following that. Let's keep looking. Let's keep looking. Got 3 black crows here. Okay, here's a good one. Another very strong candlestick. Has hardly any wicks on it at all. You want to be a little lenient with the wicks, because oftentimes you will get a few little nubs. As long as you don't have wicks on it of like this size or even like this, you know, you don't want to have noticeable wicks on it. Okay, you might have these few little nubs on the edges. That's totally fine. And as soon as price printed that, price continued to fall. Let's keep going left, keep going left. We have another bearish Marubozu here and even one here. Okay, so both of these candles printed. This one printed and price continued to the downside, where then printed this one, which is where price climbed back up. This is a failed Marubozu, all right? Now over here, we have a smaller one, but still a bearish Marubozu that prints right before this move down, very solid. Let's keep going, let's keep going. Right here, a couple more examples. Right here we have a bullish Marubozu. This one has hardly any wicks on the bottom. Nice move up, price then in turn flowed to the upside. Here's a very solid Marubozu candle, no wicks at all. Price printed this, but ultimately continued to the downside. Okay, that was a failed one. Here we have a bearish Marubozu candle, like so. Price opens, flows very smoothly down to the bottom and closes. Price then in turn flows to the downside. All right, here we go. Here's another one, perfect one, textbook. Bullish Marubozu candle here, no wicks at all. Very strong, steady candlestick movement here. These candlestick formations can be compared to, if you guys watch basketball, LeBron driving into the lane. Okay, so they're very strong, very steady, very confident. There's no hesitation on this candlestick, and in turn, price rose to the upside. Okay, we have another one right here. This green one here. No wicks on this one. It was also accompanied with an exhaustion to the upside, where then price ultimately rose to the top. All right, let's keep looking. Show you guys some more examples. We have another example here of a bearish Marubozu. Very, very little wick on the bottom, not a big deal. Okay, price then in turn falls to the downside. We have another textbook Marubozu candle here, this bullish one. No wick at all, very confident, strong. Price then flows to the upside before printing a rejection and then heading back down. You can see, guys, that these single candlestick formations are a lot easier to find. Here we have a failed bearish Marubozu candlestick. Price printed this and continued up. Happens sometimes, not a big deal. Here we have a bullish Marubozu candlestick here. Very little wick on top. We'll let that pass, and then price flows to the upside. Here again, these candlesticks are everywhere, guys. Here again, we have a bearish Marubozu candle, which then price does flow to the downside. And I mean, they're just everywhere. Okay, look at this one. This one's textbook, no wick at all. Bearish Marubozu, price flows to the downside as expected. Now over here we have a bullish Marubozu candlestick formation right here. Little bit of wick on the top, not a big deal, not a big deal. It's not massive or anything, hardly noticeable. And price flows to the upside and also creates another one, no wick at all. Okay, now down here we have a bearish Marubozu candlestick here, no wicks at all, textbook, price then flows to the downside here. And we've got another one right here, right there, another bearish Marubozu, price flowing to the downside. Let's keep looking, let's keep looking. We have a bullish Marubozu candle here. This one failed, price then printed a doji and ultimately headed to the downside, right here at this resistance. Okay, here we have another textbook, bullish Marubozu. Price continued up to the resistance. And another one right here. Price goes back to the resistance. Here we have another bearish Marubozu candlestick. Little bit of wick on the edges, nothing crazy. I mean, it's hardly noticeable. And price does then fall, but then prints this rejection to the upside, which signals for the move up. Okay, so price did fall after printing that. I mean, they're just everywhere, guys. Everywhere. Look, you want to get into some really good ones? Look at this one. This strong bearish Marubozu candlestick. No, this huge candlestick opened up and immediately fell all the way down to here, and nothing could stop it. It was a very smooth, gradual move down. There's no wicks here. This is a strong bearish Marubozu candlestick. And after printing this, price ended up printing another one here, where price continued to fall. Okay, very easy stuff, very easy stuff. You guys should start noticing a lot of these formations, even picking up on the ones that we've already talked about through here. You got 3 black crows, your rejections and exhaustions, all this stuff, 3 white soldiers, dojis everywhere through here. Let's see if we can get any solid Marubozu candlesticks through here. Here we go. Got another one right here. Bullish Marubozu candlestick. Price prints this, ultimately rises. It's a slow rise, but it does rise. Here we go. We have a bullish Marubozu here that failed. Moving on. Here we have a textbook bullish Marubozu again. Right there, price prints this. No wicks at all. Price then in turn flows to the upside. keep looking. Let's keep looking. Ah, here we go. Another one, textbook. Bullish Marubozu. No wicks at all. Price then flows to the upside before finding resistance. All right. Let's see. Find any more examples. It's very easy, guys. It's very easy. Here's a bearish Marubozu candlestick. Price falls a little bit, finds support, and then comes back. So let's see what else we got in here. Take a look. Here we have a bearish Marubozu. Again, textbook. Price just kind of goes sideways, prints a couple rejections up here, and then ultimately falls down to the downside here. Let's keep looking. Let's keep looking. Okay, here we have a bullish Marubozu candle right there. Price in turn continues to the upside. Let's show a few more examples here. We have another bullish Marubozu candlestick here, no wicks. Price then in turn flows to the upside before printing all these rejections and then shifting directions. Here's another bearish Marubozu candlestick. Okay, no wicks. Price then pulls back a bit before falling to the downside. Let's keep looking. Let's see. Here on the way up, if you're looking at this move all the way up here, we have 1, 2, 3, 4, and 5 bullish Marubozu candlesticks all the way through this move here. Now this one here, if you're looking at this one, you see this wick, that's too much wick. This is not a bullish Marubozu candlestick. Same as this one. And even this one's got too much wick on it here. Too much wick to be considered the Marubozu formation. Okay, if there's any wicks on them at all, you want them to be nubs. So small that you can hardly see them. All right, we've had a look at the Marubozu candlestick formations, and that is going to conclude this video. Welcome, my name is Easton Harris, and in this video we're going to be talking about the 3 inside down and 3 inside up candlestick formation. So here in front of us, this is the 3 inside down bearish signal. Okay, so the first candle is going to be a green candle, a bullish candle, followed by a red bearish candle. Now this bearish candle is going to remain contained within the body of the green candle. Okay, so it will close somewhere within that body, and then the third candle is going to take out the body of the larger green one. This is our 3 inside down bearish signal. Now let's take a look at the 3 inside up. Okay, here's our 3 inside up formation. It's the same thing as the 3 inside down, it's just flipped. So in this one we're going to start off with a bearish candlestick, and then the next green candlestick is going to close within the same parameters of the bearish candlestick body before it. And then our final bullish candlestick is going to take out that high of the original candlestick that started to form this formation. Okay, so this is the 3 inside up. Now let's take a look in the charts and look at a couple of examples. All right, so here I have GJ pulled up on the 5-minute time frame. We're just going to look at some examples of 3 inside up and 3 inside down. Okay, so right here, in this area right here, we have our 3 inside up. So we have our bearish candlestick that came through. Our bullish candlestick pushes back a little bit, not too much. And then the next bullish candlestick takes out the high of this bearish candlestick and also closes higher than the opening price of this one as well. So this is our 3 inside up formation here. And we'll label this for you guys, 3 inside up. Okay, and you can see that after price printed this 3 candlestick formation that we did continue to the upside. Now if you look over here on the left, we have this 3 candlestick formation here. This is our 3 inside down. Okay, so let's label this really quick. 3 inside down. Okay, and you can see that price came up. Our next red candle closed within the body of our green candle. And then our final candle took out the low of this original green candle. Now, after price printed this, price then continued to the downside. Very simple. These two formations are a lot less common than most, but you got to understand what price action is telling you. Price comes down strong and then just does a U-turn back with more force from the upside, and in turn price goes up. Same here, price is coming up with a lot of force, okay, and then price U-turns, knocks out this low of this candle. Okay, so just think logically about what these things are telling you, okay, guys? And these candlestick formations here are a lot harder to spot and won't always look so simple. Okay, but remember, guys, just think logically about what price is doing and what it's telling you. All right, that is going to be the 3 inside down and the 3 inside up candlestick formations, and this is going to conclude this video. My name is Easton Harris, and in this video we're going to be talking about bullish and bearish tweezers. So this formation we have in front of you here is called a bullish tweezer. This is our bullish reversal signal. Now the first thing that needs to happen is a candle needs to open up, come down to the bottom, and then reject back up, closing as kind of like an exhaustion, but what you'll see soon is that some of these candlestick bodies can be a bit bigger. As long as the body to wick ratio is about a 1-to-1, it'll work out just fine. Now the next candlestick is going to open up, again come back down to the low here and wick back up, but this time closing within the same area that the original candle opened. Now what this formation tells us is that price has come down and could not sustain a price point here towards the bottom where the wicks are and has been rejected back up. Okay, 2 times price has been rejected back up, and what you'll see is that these two candlesticks will normally very closely mirror each other, maybe not exactly, but you'll definitely be able to see the resemblance between these two candlesticks side by side. The only difference is that one's bearish and one's bullish. Okay, so now let's look at the bearish reversal signal, the bearish tweezers. Alright, now this is relatively the same thing, except flipped upside down, and this time you're going to start with a bullish candlestick. It's going to go up, get rejected, come back down, and then you're going to end it with a bearish candlestick, which is going to do the same thing and close relatively close to where the original candle opened. Okay, so you can see the resemblance of them side by side. Now let's hop into the charts and take a look at these formations. So we're looking at USD CAD on the 1-hour time frame. And right here we have our bearish tweezer formation. Okay, so price comes up, rejects, comes back down, closes, price then opens up again, rejects, then falls back down, creating our 2 tweezer tops here. And immediately after that, price fell to the downside. Okay, fairly simple. This is our bearish tweezer tops. Now, like I said before, sometimes the candle bodies can be bigger on these formations. I'm going to show you another example of that right now. So here we have our bullish tweezers in this area right through here. And take note that these are not like exhaustions, okay? Both these candlesticks have wicks towards the downside, and the candlestick bodies are relatively close to the same size. This forms our bullish tweezer. Okay, so don't get these confused with exhaustions. The wicks on the bottom of these show that price came down and was rejected back to the upside. Okay, price cannot sustain a price point down here. And then essentially we get these 2 candlesticks that are very closely mirrored with these exhaustions on the ends of them that signal for the buy. Or if this was flipped around, it would be the sell. This is our bullish tweezers. So don't get these confused with exhaustions. Don't think that you need 2 exhaustions right in a row to form this formation. These bodies can be a bit bigger, but as long as there is a decent sized wick on the other side compared to the body, you want to see it at least about a 1-to-1 from each wick here to determine whether or not that these are in fact tweezers. These are our bullish and bearish tweezers, and this is going to conclude this video.